What is turtle soup? From scratch. And this series is going to go through some basic information which you may know already or may not know. That doesn't mean you skip it. A reminder is the best teacher. The more times you repeat something, the better you get at it, right? Whether it's surgery, whether it's you're a carpenter, you're an electrician, an engineer, a trader, whatever you are. The more times, the more reps you get in of something, the more professional you get, the more details you notice, right? So this is both for my public and private mentees. If you are part of the public following of me, then this is for you. If you are a private mentee, you'll see some things which are familiar, but not everything, right? There's more privately, of course. But all of you, public and private, you must pay attention and revise. Right? It won't be that long. It'll be like 10-15 minutes per video. Right? But pay attention. Put everything away and pay full attention to the video. Right? And study these videos. Don't watch them just for fun. Watch them with a notepad in hand to note the important things that I'm saying. All right? What is turtle soup? Turtle soup is, in short, a false breakout or a false breakdown. Mechanically speaking from a perspective of the market makers, it's the action of deliberately pushing price above an old high or pushing price below an old low with the goal of filling large orders in order to move price. Yes, that was a mouthful, and yes, I will elaborate. The markets are controlled, right? And in order for the markets to be controlled and to move at all, you need to have false breakouts and false breakdowns. When I first went into trading, I had many options in front of me. I had Wyckoff, Gann, harmonics, elite wave, supply and demand, classic price action, highs and lows, Dow theory, right? And they all work to an extent. They offer you a 50-60% accuracy rate. But I wanted the most accurate, most correct, most objective way of trading. And I ended up with discovering turtle soup, false breakouts, false breakdowns. All right, so they will happen as long as the algorithm runs. Because you know the market is controlled by an algorithm, right? As long as the markets are open for trading, there will be a turtle soup, always, right? Price will always dig into an old low to rally and dig above an old high to dump, always, right? Why? Because 90% or more of the market participants, and I'm talking about the hedge funds, the deep pockets, not me and you. No, not the average trader with his $100 broker account. No, 90% of traders, retail traders, they have systems designed to catch trends, right? And that is exactly why 90% lose, right? Because most digs into old highs and below lows are false moves, right? Don't believe me? Go investigate, go look in the charts, and you'll see this as a reality, right? So if you're having doubts as to, is this strategy for me? Is this the correct thing to follow? Do I want to invest time and effort into it? the answer to all those questions is yes, go investigate. Go do something. If you want this to be a silver spoon feeding, then you can quit this video, exit right now, go follow some any random scammer mentor you have on social media. There's plenty of them. Right? There's no end. There's a new one every day. Right? Go and enjoy strategy hopping. Good luck. Now that we have those people out of the way, for those who are seeking the truth of the charts and the truth of the markets, this is the way. Turtle soup. Everything you ever do is based on false breakouts and false breakdowns. All of it. Here's an example of a bearish turtle soup. So we have an old high, and then we have a decline, and every single old high has above it what? Buy stops. Right? What does that mean? That means the people who sold short, the traders who sold short above this high and profited on the way down, have their stop loss over here. Right? Also, you have new buyers viewing this as a resistance level, placing their buy orders above the old high. Right? So as soon as we break above the old high, they want to buy. Right? The classic breakout strategy. It's very well known in the retail world. What happens is both of those people will get knocked out, and then the move will happen. Right? So price stabs into the old high, stopping out anyone who was short, and enticing new long positions above the high. When those two objectives are met, price will dump. After everyone is knocked out of their positions, price goes the original intended direction. A live chart example, and this is something I call live. It's not some hindsight garbage, right? Most of these examples are things I either traded live or call live on Twitter. In this instance, I called it live on Twitter. Homework is for you to discover which chart is this. Now, we have an old high and we have a decline. As soon as this happens, then dumb money has their stop loss up here. They're short, right? They view this as a, hey, you know what? Price fell down from this position, this level over here, right? That means it must be a strong resistance. So I'm going to place my stop loss up here and just ride the trend down here. And if it breaks above that old high, that means we're bullish, and I'm going to buy up here. Right? So there's buy stops above the old high. Price is going to stab. They're going to push price above the old high.